Happy Saturday, everybody. I hope you all are having a great weekend. Demand is hitting a 6-month low. At the same time, we are seeing active listings hit new highs, and especially in certain segments. We're going to talk about which segments are getting the most inventory. I've got a heat map of days on market so you can see where houses are sitting and where they're moving quicker. And I've got a really cool new build chart to show you. So this is going to be a fun video, and we're going to go all over Nashville in this video. I'm really excited about it. But first, my name's Ethan Flynn. I'm a realtor. I'm a CPA. I'm an investor. I'm a data junkie. I'm not trying to get anybody to buy, but if you are buying, I would love to help you. You can go to ethanflynn.com. You're not going to get any better data than in this video because we look at leading indicators. I figured out a way to recreate the canned reports before they released, and I forecast those reports in the next month so you can see what's happening and going to happen, not what has happened. That's the most relevant if you're a buyer or a seller. So without further ado, let's get into the data. Okay, first things first, June closed at 475 for single family homes. We go back up to May, it was 479. I've said this has been a lull for a couple months, and guys, it's still a lull. Look at this. Our median sales price so far this month is 475. I kind of think it'll creep up as the closings come in for the end of the month. So expect it to be between 475 and 480. But the fact that there's no increase in median sales price is saying a lot, guys. We're still 5% down from peak from last year. And from here on out, I personally think that prices are going to go down. Why? Because demand is soft, and we've seen the highest inventory we've seen this year is today. Today, the highest inventory we've seen this year. I'm going to show you those numbers here in a second. But let's take a look at inventory, how it will be reported with Greater Nashville Realtors. Now, here, if we were to report it today, it'd be this 5791 plus 1300. That's 7,000. It's not going to be quite that high because typically there's a lot of active listings that expire at the end of the month, and those don't go into the calculation they use. Nonetheless, we are continuing to see new highs in inventory. Let's take a look. So here in Middle Tennessee, we've got 6,063. That's 30 higher than it was last month. You remember I said, if we just grow 50 a week for the next 10 weeks, we'll be at 65, 6,600. We grew 30 this week, so a little lower, but nonetheless, we're on track for a 63, 6,500, which is where we peaked last year. So could we peak there again? Maybe so. Interestingly enough, look at the supply ratio. Now, the supply ratio is just active listings over contract volume. This blue line is contract volume. Notice it is tanking, 2437. You've got to go back all the way to February 6th to see that kind of number. And so it's really the lowest demand has been really since we got that shoot up at the beginning of January through February. It's the lowest it's been. And you can see the supply ratio, active listings over contract volume at 2.5. That's the highest it's been since January. So we are finally getting caught back up. Now, I know a lot of you are going to say 2.5 months supply, which is what we use. We use month supply based on contract volume, not closed volume, to give you more of a lead feel. How does it feel today if you went out to buy, not compared to last month, which is almost useless, especially when demand and closed volume changes drastically month to month. 2.5 months supply, it's tight, but I'll tell you, when we hit 3 months supply last year, prices were tanking. I mean, crashing. And let me show you Davidson and Williamson County, because I think there's some really interesting data happening here. So Davidson or Williamson County, 1,068. We're over 3 month supply, which is wild. Look, we hit 3 month supply last October. We're already at 3.1. Let's take a look at contract volume. Contract volume is falling through the floor at 341. When you take 1,068, which is a multi-year high for Williamson County, over 341, you get 3.1 months supply right now. The point isn't about a true month supply. It's about how it feels when you go to an open house, how it feels if you're trying to sell your house and there's literally, contract volume 1/10 of the active listings on the market. That feels like a ghost town if you're trying to sell your house. That definitely creates opportunity for buyers. And it gets worse. Because if we go over to our price bands and we look at Davidson and Williamson and we break out the $1 million listings, which I've been tracking for the past year, I haven't shown this in a few weeks, but this blue line, you can see we're at an all-time high of 1,200 active listings that are listed over $1 million. At the same time, check out contract volume. Contract volume is tanking. We're only 230. You can see we peaked at 320 just 4 weeks ago. We were at peak contract volume. We are now at a new low going all the way back to the spring at 230 with that all-time high. What does that create? That creates a month supply right now that feels like 5.2 month supply and going vertical. So if you've been waiting to buy $1 million listing, you're starting to get good opportunities. When I say opportunity, conversations, pushing on price, getting things that are important to you, flexibility. On the under 700s, it's a little tighter. It's much tighter, right? It's still a much more of a seller's market. Nonetheless, it's higher than it's been really since the beginning of the spring at 1.9. So just keep that in mind. It still feels tight, but much more opportunities out there now than there was when the school zone scurry was going on just 4 weeks ago. Okay, let's take a look. I've got a couple of really interesting maps. Now, this is a days on market map. You can't see it. There's a little toggle bar on the top right of my screen that you can't see. Apologies about that. That I can change the keys on here. I'm actually going to share this with you. If you're a paid subscriber of my Substack, you'll have access to this. Everything 60 days or longer that's been on the market, this is a heat map for. So we can zoom in and we can actually see the neighborhoods that are really heavy with listings that are 60 days or greater. You can see Charlotte Park. There's a ton of listings that have been on the market for at least 60 days. Look downtown. There's a ton of luxury condos that have been on the market for at least 60 days. So this is a really good, and when you overlay the new listings, that would be the under 15 days. You could see some of these areas that are really saturated with active listings. You can click on a listing. It's going to give you the MLS ID and it's going to give you the days on market, but you're going to have to look up that MLS from RealTrax. Nonetheless, if you want this map, be a paid subscriber. I'm going to share this with you. You can look all over. It's 9 counties. It doesn't include Clarksville. Sorry, Clarksville. I'll try to add that later, but it's the 9 counties surrounding Davidson County. And you can literally just pick an area and zoom in on it. You can see how the aged inventory by color, by band, and you can see the legend down here. So it's really cool. I also did this with new builds. So in new builds, you can see the blue is the new builds. This is going to show you the areas heaviest on the new builds. And as you zoom in, you can actually see the neighborhoods that are really building out those new builds. Now, obviously, this is only new builds that have been listed on the MLS. So if you have a neighborhood being built and they're not listing it, it's not going to show here. Nonetheless, you can take that and you can overlay active listings from existing homes, and you can see which areas might feel the most stress. You take this and you compare it to the ones with days on market, and you can kind of conclude some pretty interesting things about your specific area. So these are really great tools. Again, I'm posting them with this video here shortly. So you should be able to see this with this video if you go to my Substack, ethanflynn.substack, I think it is. I don't know. I'll put the link in description. Last one I wanted to show you. I had a buyer looking in Durham Farms. He was looking for a 4-bed. So what did I do? I pulled price per square foot over time in Durham Farms. The blue is new builds. The red is existing. Look at this gap right here where they weren't building any houses. And look at how existing prices shot up. As soon as new builds started coming in, what happened to existing? They started coming down. So we peaked August of 22 here in Durham Farms with the highest one of 280 a square foot. Okay, now with a new low of 222 a square foot, we haven't seen an existing home 4-bed, by the way. This is just 4 beds, but we haven't seen a 4-bed go for 222 a square foot since October of 2021. So you can see the price pressure happening here, all because of the new builds. This is Durham Farms. This is in Hendersonville. Here it is with all the houses in Durham Farms. You can see new builds really are putting pressure on those existing. So super interesting. If you are interested in buying, I'm not trying to get anybody to buy, but if you are a buyer and you would like to buy, I'm happy to help. You can go to ethanflynn.com or you can contact me through the information in the description below. And with that, I hope you guys have a fantastic weekend, and I'll see you next week.